Hello and welcome to the Des Moines Real Estate Show. I'm Jim Hibbs and a licensed realtor here in the great state of Iowa and here at the North Park Studios in Johnston with one of our favorite guests, Dominic Black. That's right.
I like that.
It's an office studio.
Yeah,
Same
absolutely.
thing.
Just like you, I'm licensed.
That's right.
Yeah.
He's a mortgage expert and we're going to talk about mortgages. We've got several shows lined up to talk specifically about different products. Today we're going to talk about FHA, but there's conventional USDA, VA, and Dom, you're going to talk about FHA today. Give us the top five.
Yeah, top five for FHA. Yep, you got it.
All right, let's first take a look at the numbers today. As of January 25th, 2019, 3,523 homes on the market. That's pretty steady week to week. 2,792 of those are single-family homes. In that all-important and still busy under 200K market, 748 in central Iowa, 363 of those available in Polk County. From 201 to 300,000, 834 on the market, just 503 in Polk County. 1,209 in the 301K plus market. So nearly half the market in that higher price point right now, early stages of 2019. Number of townhomes, all prices, 561 on the market. Today is the beginning of a series of shows in which we will kind of break down the different types of mortgage loans.
Absolutely.
Yeah, and today is FHA.
We're going to talk FHA because I've had a lot of questions come up here recently in regards to FHA. Why FHA? Customers may have talked to another lender. Lender said, hey, you're going to have to go FHA. They've talked to a family member, and the family member said, hey, we did our loan FHA. So we get a lot of questions of why FHA.
Yeah.
So what we're going to touch on today.
And one of the things, too, we usually think of first-time buyers in FHA, but
it used to be.
Not necessarily the case today.
No, not anymore. It used to be. So a lot of people say, is there a first-time home buyer program, FHA? Well, it's not really a first-time home buyer program.
All right, well, let's break it down. Let's talk about the top five things we need to know. What are the questions you're getting on the phone right now about FHA?
The biggest one is, why am I being told to go FHA? Well, there's multiple reasons why, because the biggest thing to me is I don't sell FHA up front. The first thing we'll look at is conventional 3% lending. Reason being is normally with the higher credit scores, you're going to get you're going to get a lower payment, and you're going to get better mortgage insurance. Mm-hmm. And with conventional, there's obviously some perks in regards to when it just comes not to having certain things that FHA does. So when we took a look at FHA, the one thing, rates.
Yep.
If your credit score 680 or so, you're going to have a pretty good rate. And where conventional, you're going to have a higher rate. So with FHA, you may have an eighth to a quarter less rate, which is great. Mm-hmm. That's a good thing.
That's real money.
It's a fixed rate. The issue with FHA is with your higher scores, you're still going to have their mortgage insurance. So for the MI, when I say MI mortgage insurance, you'll have a higher mortgage insurance going FHA than if you would say you had a 740 credit score going conventional. FHA also has what they call upfront MIP, mortgage insurance premium, that is 1.75 of your loan amount that is added back onto your loan amount. So you have a base loan amount, add in MIP, increases your loan amount. So in a sense, you have two mortgage insurances. One, you're paying a little up front, and then you're paying monthly on mortgage insurance.
Now, that mortgage insurance is something for folks who might not understand what that is. That's the banker in FHA adding money to your monthly payment.
It's insurance.
Right.
Yeah.
On the mortgage, that you will continue to pay that mortgage.
And that mortgage insurance benefits the lender in case you default on the loan. That's mainly what it is. It's like having house insurance. Your house falls apart, something of a sort gets hit. Well, it's rebuilding the house. It's obviously the lender is going to get paid if the house was not rebuilt. So, FHA, again, 3.5% down, which is great. Conventional, 3%, which is why I always look at conventional first. You don't have to be a first-time home buyer for FHA. There are a couple conventional programs that you do, which is why we say it's not a first-time home buyer program. So we look at that, and then we're going to look at there's no income restrictions.
Right.
FHA does not have income restrictions where there are a couple of the conventional lending items that we do have that do have income restrictions.
Things change. I know, for instance, this year they bumped up some of the mortgage amounts.
Yep,
They bumped that up.
If you're putting down 3.5%, your max purchase price would be about $326,100 for FHA.
Okay.
If you're putting 3.5% down. Now, if you're putting down more, you can go up higher in the purchase price.
Yeah.
And also, FHA's credit scores. Conventional 620 is the minimum credit score. FHA depends on the lender and the investor. For us, it's a 590.
Wow.
That's the lowest we'll go to. Conventional, you cannot get approved at that. And if you have a 640, 720, and someone's trying to take a conventional, probably not the best route. Your mortgage insurance is going to be super high. Your rate will be high. That's when FHA is a better option. So just so many things involved with FHA and why we look at it. So when they say why, well, what's your debt to income ratio? What are your credit scores? How much money do you have down? There's multiple factors. Bankruptcy. You can be 2 years out of bankruptcy for FHA, 3 years out of foreclosure for FHA. Things that conventional doesn't allow, the FHA will. So we get a lot of questions. Why? Well, there's so many things involved, and which is why you go with someone who is knowledgeable about lending, because their job is to put you in the best product.
To find that right product for you. You know, too, with the FHA, there are a few more rules or as far as the appraisal goes. There are a lot more I's to be dotted, T's to be crossed.
Used to be way worse than it is now.
Yeah.
Used to be when people would ask for an FHA loan, the agents at that point like, oh man, this is going to be horrible. Really, all we see anymore is chipping and peeling paint and handrails.
Yeah.
You don't see much more than that.
And that's all designed to protect you, the buyer.
Absolutely.
That's part of the rules there. But FHA, let's recap that real quick.
Okay.
What are those top 5 things?
So top
we need
5
to
things.
know?
We're going to say rate.
Yep.
Rates are great for FHA. Depending on credit score, they can be an 8 to a quarter less. We're going to look. You can get approved at a higher debt to income ratio, where you're capped at 50% on conventional. FHA, we can get approved up to 55% debt to income ratio. The 3.5% down, great thing. Nothing wrong with that. It's just 0.5% more conventional. There are no income restrictions and lower credit scores.
Lower credit
Those are
scores.
your 5 items.
All right.
But if you have questions, obviously you're here to help. I'm here to help.
All right.
Yeah.
Next time we'll talk about conventional.
Conventional 3%.
All right.
We'll confuse people even more.
Dominic, thank you as always.
Thank you very much.
Hey, get out there. Thanks for joining us. Get out there and make the most of the day.